And we is on YouTube. What it do, man? How is everybody doing? Welcome to another video. It is currently Sunday, 11/23/2025. Currently making this video at 5 p.m. Eastern Standard Time. A little later than usual, but welcome. How's everybody doing? If you guys are new to the server, Collectors Club, link in description, will be 100% free Discord server. Collectors Club, we are currently building it up for bigger and bigger audience every single day. But coming into today's video, I put out a poll in Collectors Club asking, kind of like a YouTube video preferability, a little poll for you guys to ask, what would you guys prefer today's video to be? As it is Sunday and there's no live data, right? But a lot of people need suggestions to what exactly do they want to learn, right? So coming into today's video, I put the poll out for technically the last 40 minutes, got 69 votes, and the most voted preferability or suggestion was how to identify strong reversals. It was super close to the weekly outlook, but I guess we'll do a weekly outlook coming into Snowski Outlook tomorrow morning, or maybe I'll actually do that tonight. But how to identify strong reversals won the vote, so that's what we're going to be covering in today's lecture. Now, a lot of these concepts are something that you guys have already heard if you guys are part of my Collectors Club Discord server, but if you guys aren't familiar with what I teach, I primarily teach and use quarterly theory, power of 3, and MMXM concepts, all correlated together to refine narrative and low time frame entries. So hope you guys are doing well, hope you guys are having a wonderful weekend, but we are going to hop straight into this to get straight down to the point. Man, we got some shit to learn. So I'm going to do my best today to try not missing anything. I don't have a set-by-set list. I'm just going to go firmly off of just mental recognition here, but I did write down a little step-by-step for me how to actually frame overall narrative. Okay, when coming down into how to identify strong reversals in the market, well, it really comes down to why I implement all of these concepts together. Okay, so we're going to break this down. What exactly is quarterly theory? Well, not breaking down the entire thing, but what exactly does it refine for us? Well, quarterly theory is going to refine time. Okay, time is going to tell us in the market when it's expected to reverse, when it's expected to continue, right? Power of 3, on the other hand, is price. Price delivery, meaning giving us expected volatility when price is delivering to a specific level of hours, right? Quarterly theory will reference back to time, when it's supposed to deliver, okay? And then what do we have? Well, we also have MMXM. MMXM is more of a pattern recognition, okay? What do I mean by that? Well, MMXM is going to be pattern recognition, as in what does it look like to identify, right? What do these stages identify as? What do they look like to us as just simply eyesight, right? What does it look like as in like a reoccurring pattern? But putting all of these together, how can we utilize to refine narrative? Okay, now by the end of this video, you guys should have a very good understanding of this, but think of this ideally like this, okay? Power of 3 will show us price delivery. Quarterly theory will refine time that it's expected to deliver this price, and MMXM will give us what it looks like. Now, we also do have another pattern recognition that we are going to be using for quarterly theory, and that is AMDX, XAMD, which is also kind of quarterly theory plus pattern recognition. Okay, so keep all of these in mind. Now, when breaking down, looking on the higher time frames, what are we looking for? Well, one, we're looking for market structure. Okay, market structure has to, in order, shift, meaning going from a bullish profile to a bearish profile, in order for us to even think about power of 3 and quarterly theory cycles such as key and true opens and Kraken correlations. Okay, market structure is number one of what we are always looking for. Does that mean that is the first thing that is going to initiate? Well, not always, right? There usually sometimes will be a Kraken correlation before market structure will shift, but you need all of these paired together to form a strong reversal in the market. Okay, so what do I mean by this? I mean, If we are going from a buy side or a buy market into a bearish market, a sell side delivery angle, right? As you can see, we're in a buy market here, we're in a sell side delivery here, or a sell market here, sell profile, right? What exactly are identifications that market structure is shifting? Well, think back to basic ICT understanding, right? Smart money concepts. Liquidity being taken, cracking correlations, right? All at the highs to prove bearish runs. But most importantly, PD arrays, okay? BISIs, SIBIs, volume imbalances, order blocks, breakers, all of these different concepts, they all will constantly keep pushing price higher and higher. But what is the market structure, I guess, identification to price to prove a reversal? Basic market structure invalidation. As we see, we have bullish gaps here. Actually, let me go to the daily time frame. It's a lot easier to see this. What do we have? Rejection wicks. Remember, I told a long time ago in my old concepts, in my old lectures, about jagged and smoothness, an old ICT concept that he taught in 2024. Well, what do we have under here? Smooth liquidity. What do we have above? Jagged liquidity. So jagged prices to the highs. This is an identification or a signature of reversal, which is market structure. What do we see? We see gaps being inverted, right? Because look at this. We have a new week opening gap. What do we get? A closure underneath and retested as an inefficiency, right? This is a bearish PD array now. Well, we also have a daily fair value gap that gets inverted here. As we can see, bearish closure technically retests it and then sends even lower. All signs of bearish market structure. So these are signs of a correlation. Not exactly decorrelation, but more of a shift in market structure. Okay, bullish market structure, we get signs of bearish trend. Now, understanding that we have bearish market structure, how do we identify it with power of 3, quarterly theory, and key opens? Well, let's reference to this. What I'm going to do is I'm actually going to pull up my ICT candles and my key opens. So let's do this. We're going to go to the 4-hour time frame. Let me pull up my ICT candles. Where they at? There we go. So what are we looking for in price? Well, think of this logically like here. If we're looking for a monthly power of 3, let's not look at the weekly just yet. If we're looking for a monthly power of 3 scenario to identify narrative for every single day coming into the month, okay, well, let's reference to this as a power of 3 scenario. Right? Middle. There we go. Two different scenarios in power of 3. Open high, low, close. Open low, high, close. Two different market profiles, bullish or bearish. If we're expecting a bearish market profile for the entire month, how do we correlate power of 3 and quarterly theory together to refine a bias? Well, think of it like this. Every single month, every week, every year, every session is going to have quarters. No. And within these quarters, it's going to be broken down into each quarter having a specific scenario to play out. Currently, we just finished up our 3rd week. But what I'm going to do is just do a hypothetical reference to this. Power of 3. What does that mean? That means when the opening price of a monthly candle opens, we're going to have an AMD around it, meaning we're going to possibly manipulate above the monthly open price, as we got here, and we're going to distribute below it. When these cycles play out, what exactly is an identifier of manipulation being done? Well, that's number 3, crack in correlation. Cracking correlations refer to SSMTs, SMTs, PSPs, range divergences, swing divergences, all different concepts of cracking correlations, right? What are we looking for above the monthly open price to validate an open high, low, close? We're looking for a cracking correlation above the monthly open price. Well, what do we get? This high has a cracking correlation or an SMT with the previous day's high. If you look at this high right here on YM's chart all the way on the right actually does get swept, while NASDAQ and ES fail to create a higher high. So currently this is our cracking correlation above our monthly open price, which proceeds to give us the expansion that we need lower. Okay, so monthly open, cracking correlation above the monthly open price. What are we identifying to now? Quarterly theory, right? There's going to be 4 weeks within the month. Expansion, accumulation, manipulation, next week being distribution, right? But also let's reference to true opens. We have technically the second quarter of our monthly open. This is our TMO, or true month open. Same logic applies to true month open that monthly open needs, which is what? Cracking correlation above it for an open, high, low, close, no? True month open. Opens, manipulates above. What do we have right here? Look on YM. YM proceeds to take all-time high. That is our identification for now bearish power of 3. Open, manipulate high, cracking correlation above the TMO price, distribute below it. Open, high, low, close, right? Now, referencing to all different power of 3s. There is monthly power of 3, 3-month power of 3, yearly power of 3, weekly, daily, session power of 3, all these different power of 3s. What is one thing in common that all of those power of 3s are going to have when refining a narrative? If narrative is, if bias is bearish, every single power of 3 should reference to an open, high, low, close. Okay, I'm going to say that again. You guys have to have this down in your freaking notes because this is insane knowledge to understand. From high time frame all the way down to intraday power of 3, if the bias is bearish, you are looking for open, high, low, close. If it's vice versa, open, low, high, close. Okay, this is the significance of power of 3 and quarterly theory putting together. If we are expecting that the monthly open price already had a manipulation above it, cracking correlation above it, bearish expectancy, right? We're expecting every intraday move between this entire week is supposed to give us an open, high, low, close. All right, coming into the next week, TMO manipulates above it. So what are we expecting from this cracking correlation and past that? Open, high, low, close. Same thing with this week. We already got the delivery above true month open. So what are we expecting knowing that this is our manipulation quarter? Open, high, low, close. The week sells off, no? Exactly. So I understand this video might be like all over the place, very, very confusing if you guys don't understand these concepts. I'm making this video specifically for people that are more advanced and that understand exactly what I'm talking about, okay? You're looking for market structure to shift, meaning gaps being invalidated, jaggedness on the highs, then you're refining it down into power of 3 and quarterly theory. Well, we have in power of 3 our monthly open price. In quarterly theory, we have our true month open price, all referencing to key opens. Then number 3 is what? Cracking correlation. What do we want to see above all of these key opens, being monthly open, TMO, and all intraday opens? We want to see a reference to open, high, low, close, because the higher time frames are referencing to open, high, low, close. You see how all that pairs together? Yes. And when it comes into quarterly cycles, we understand that the month's going to have 4 different expectant cycles. XAMD or AMDX. Well, this month is XAMD, right? So if the expansion on the first week is going to be expanding lower from the previous cycle, which was technically the previous week already proving bearish displacement, if this is expansion, it's going to be an open, high, low, close, no? Exactly. Coming into accumulation, open, high, low, close. Exactly. Next week, open, high, cracking correlation, low, close. Doesn't this all make sense? Okay. Now, we can also reverse engineer this with the understanding of all things put together. If we're expecting buy side of the curve, we're expecting open, low, high, close, right? That means we're expecting an opening price to manipulate lower into it, underneath the opening price, and distribute above it. Okay, so all of these concepts paired together, they can sometimes be confusing. Don't let it confuse you, okay? Simplify it. It is not hard, even though I'm blurting out so much information, if you actually break it down, okay? If you understand basic market structure from ICT, you understand if trend is shifting, you want to see signs of it, right? Meaning liquidity getting taken, jagged highs as we were showing on the daily time frame, gaps being inverted to send lower, all signatures in price that we had on the daily time frame. Power of 3. Power of 3 means AMD. Quarterly theory, AMD X. Both having key opens. Power of 3, monthly open price. Quarterly theory, true month open price. Both have the same exact identifier for price. What are we looking for? Cracking correlation above monthly open price. Got right here. Cracking correlation above TMO price. Got right here with all-time high with YM. All proving what? Bearish delivery. So if we're expecting the month to be open, high, low, close, we're expecting every intraday, every week, every day, every interday, depending on the low time frame bias for the AMD cycle it's currently in, to be an open, high, low, close. Until what? Until the draw on liquidity is met, which was what? The October low. Beautiful, huh? So it's kind of funny. I bet you I'm talking all fast right now and people are going to be like, huh. But just, guys, if you have to, watch the video over and over. But guys, when it's refining narrative, you have to understand, even with the understanding of price that I may have right now, guys, it is not confusing. It is not hard to understand. Reverse engineer this. If there is no cracking correlation on a prominent low above or below a key open price, what does that mean? It means that price is likely to get taken, no? Well, let's reference to something that we were just talking about. 3-month open price. Let's take this month open price off. Take all this off. Go to the daily chart. 3-month open price. Let's reference down here. This is our 3-month open price. Okay. 3-month open price. What are we looking for if we're looking for a bullish open, low, high, close 3-month power of 3? We're looking for a prominent cracking correlation underneath 3-month open price, right? Reference to the October low. Is there any cracking correlation at this low that is proving bullish prices? No bullish cracking correlation underneath the 3-month open price. I mean a prominent cracking correlation, not a hidden SSMT, a prominent divergence in the market where one asset purges liquidity while the other ones fail to. That's what I'm referencing to. There wasn't. Why did we deliver underneath the 3-month open price starting November? Why was my monthly power of 3 bias bearish? Zero cracking correlation affords the ability to put in a new low underneath the October low to what? Have a cracking correlation underneath the 3-month open price. Look at YM. Zero cracking correlation. I'm sorry. Let me reference back to this. There is a cracking correlation now. As you can see, YM fails to get underneath the tariff low. NASDAQ ES purges it underneath the 3-month open price. That is our high time frame cracking correlation. What am I expecting for next month? Bullish prices. Bullish fucking prices. Guys, this stuff isn't as complicated as you really make it seem. Reverse engineer it. If you need a cracking correlation above or below a true open price to send price higher or lower for further expansion, what are you looking for? Cracking correlations. If there's zero cracking correlations but price is expanding away, what does that mean? That means that low or high is unprotected and is likely to get turtle souped, right? Meaning all of this move right here was purely retail methodology Judas. It is fucking manipulation. Okay, so this entire push up right here is fooling everybody, saying, okay, price is going higher, let me put money in cryptocurrencies or whatever stock to get it higher, to get a better portfolio, and then, oh shit, the market takes you out. Why? Zero cracking correlation. Okay, there is significant key points in price, such as key opens for daily power of 3, monthly, weekly power 3 open. There's also true opens referencing the quarterly theory, all using the same concepts such as cracking correlations. Cracking correlations will prove prominent reversals. If there is zero cracking correlation, what does that mean? That reversal is improbable, meaning it's probably going to get taken out. It is probably going to get stop hunted, and you are probably going to be considered liquidity. Okay, this is the whole identifier to price and time and pattern recognition. Pattern recognition will show you what price looks like. Power of 3 will show you where price is expected to deliver, right? Reference to the key opens. It's supposed to deliver underneath the 3-month open price. Quarterly theory, time-based confirmations. This is not a time-based confirmation. This is just power of 3, accumulation, manipulation, distribution. When you pair quarterly theory, there's zero cracking correlation down here, meaning there's only price, no time. It needs to go time, then price, then delivery, right? This is only price. And maybe a little bit of MMXM, right? Because we have original consolidation here. But then price delivers the sell side of the curve during the MMXM and actually puts in a prominent cracking correlation underneath the 3-month open price, meaning next month is going to deliver to the fucking moon. Okay? So that's as simple as I want to make this video. I know it may have been a little confusing to people that don't understand these concepts, right? But this is not an intro video. This is more of an intermediate video explaining that you need a set-by-set guide. Market structure shifts. Okay, reference to power of 3, quarterly theory, pattern recognition, what refines those, cracking correlations. Pair all 3 together, you can easily identify when markets are lacking a specific delivery and when they're needed a cracking correlation in price, meaning that damn low right here is unprotected and has the probability of stop hunting. Think of this logically. Everybody got fucking liquidated during this tariff dump. What wrestlers are here? A shitload of orders. A shitload of sell side liquidity or stop hunts. Zero cracking correlation. Inefficient new week opening gap. Reference to your charts. There is a inefficient or unmitigated new week opening gap. Sell side liquidity. Uncracking correlated power of 3. Like, how many more confluences do you need for price to deliver there? Dude, it is gonna go. But the same thing can be referenced to daily charts, to weekly charts, to intraday 4-hour power of 3, all of these things. If price is expected to deliver a 4-hour bullish power of 3, but there is zero cracking correlation underneath a bullish power of 3, underneath the 10 a.m. open price, what does that mean? That means everybody that went long initially is probably gonna get stop hunted in that, creating a cracking correlation and then proceeding to go, which all comes down into patience and just being smart in the markets, looking for what you need to see when it's playing out. Okay, so I'm gonna stop the video here. I hope you guys learned something today. If you guys have any more questions, drop them down in the comments section. But as always, I'll see you guys at the top. Peace out.